Well, we've got pretty interesting trade going on in our grain markets today. I'm Marlon Boulding with you, and let's take a look at this corn market, which I'll remind you opened up about 2 cents lower. And look at where we are now. July corn, 12.5 cents higher at 8.14. And we even got as high as 8.18.5 before backing off just a little bit. But boy, this has got a little volatility behind it today. December corn now 7 higher at 7.50.5, and it had been lower early as well. Well, let's look at soybeans. We have July now 1 3/4 higher at 16.73.5. That's about, let's see, what would that be? 8 cents off of our earlier low this morning. So it's turned around as well. We have November new crop soybeans 9 3/4 higher at 15.12.5, and narrowing up that spread between July and November by about 7 cents or so this morning. Now let's look at the wheat with our quotes provided by Bar Chart in Chicago. July is now 3 3/4 lower at 10.91 1/4, but all things considered, that has come back quite a ways from a low of 10.78 1/4 this morning. So we're off of that by 13 cents now. In the Kansas City market, you have July now quoted at 11.59. That's down 5.5 cents. Spring wheat market in Minneapolis, July is up 7 at 11.95. So bucking the trend in the other two exchanges. And in cotton, here we go again. We have July now almost 500 points higher. We're up 4.99 at 140.67. Huge moves in the cotton market today. We're joined by Todd Bubba Horwitz of BubbaTrading.com in Chicago. Wow, volatility is reigning supreme here in some of the grain markets this morning. What's going on from your perspective?
Marlon, markets are showing volatility everywhere. I mean, look at the indexes, look at the equity indexes, look at gold and crude. Look, we're in very thin markets right now. You've got so many issues in the economy that's creating this major volatility. You've got people trying to short markets like cotton and getting trapped in the short side, and they're running them higher. Grains want to go higher, and every time they go lower, we talk about what's going on. Of course, they end up going higher again. And again, this is all related to what's going to be demand later, because we're going to be probably short next year. It's got to do with weather. It's got to do with inflation. I mean, there's about a list of about 1,000 things that are pushing these higher markets higher and won't let them go lower because, again, we've got too many issues in front of us, let alone the ones that we have behind us.
So we're just now getting a good start on putting the new crop in the ground in the United States for corn and soybeans. When you have volatility like this, Todd, what kind of a marketing strategy should one adopt to kind of keep their upside open, I guess, if you will, but maybe lock in at least a good profitable level right now with these rewarding prices?
Well, I think you just have to be hedged, Marlon. You have to use the derivative market to hedge. And again, there's hedges that you can create that can leave the upside wide open. So when we have a big market like we have now, you get to participate in that big market and get 90% of the move instead of 100%, but you get very little risk to the downside, which, again, you start getting, the higher we get, the greater the likelihood of A, volatility, which would bring in emotions to people, and B, then when it does break, the harder it's going to fall. So I think you have to put yourself in a position to be in what we say win-win, right? If it goes down, I've already locked in my price. If it keeps going up, I get to continue to raise my overall basis. And I think that's what people have to remember.
Well, Todd, thanks for all the information today. And again, these markets are going to be hard to corral all growing season long. So it's going to be tough to stay on top of it. And I encourage everybody to stay in close touch with their risk manager. Todd Bubba Horwitz with us, BubbaTrading.com in Chicago. Great stuff. We'll pause here. We'll take a look at livestock trade next.